Joining us now for a closer look, as always, is Schwab Network host Marley Kayden. Very good morning to you, Marley. Happy Monday. So Apple getting a bit of love from Dan Ives. Talk us through what the analysts are saying here as to the price target boosts.
Yes, like you mentioned, a little bit of love across the board here. We did get two big moves to the upside for their price target adjustments from Wedbush and from Evercore ISI. Let's talk about Wedbush first. Dan Ives, when he speaks, the street listens. He did put out his top 10 tech stocks to watch through the end of the year. Apple number 6 on that list. But today, upgrading the price target to $350, up from $320, maintaining that outperform rating, saying that 2026 is finally going to be the year that Apple really enters the AI race, that this will be the time that we start to see them participate in this AI conversation where they finally enter the game. Also talking about iPhone sales as well being really important. They said the iPhone 17 sales have been trending well into the year end, including in the China region, and they expect that to execute above expectations for the December quarter with this healthy holiday season ahead. Now, important to note, back in October, they also did a price target increase up to $320 from $310 because of how well those iPhone sales were going. Now, as far as this AI piece, the firm thinks at Wedbush that the monetization piece could add $75 to $100 per share to Apple over the coming years as it finally enters this AI revolution. And for a while now, they've been talking about that Siri is going to come to fruition since 2024, this context-aware Siri. Now Wedbush is saying they think it's going to come out sometime this year. So this coming year, 2026, will be when they finally come. They also addressed another topic that's been in part of the discussion as Apple appears to be doing some restructuring with some of its management, saying that Tim Cook, they think, isn't going anywhere. They said they believe Tim Cook will stay in his position as Apple's CEO until at least 2027, with some saying that their sources saying that Cook is insisting on seeing Apple through this AI transition. Now, as for Evercore, they raised their price target up to $325, so not quite as high as Wedbush's. They're $25 below. But saying the upcoming AI strategy, which is centered on this Siri 2.0 relaunch in early 2026, could be also a significant catalyst for growth. So similar sentiment here, but they're saying that they think they're going to announce this new Siri 2.0 in March of 2026 at a standalone event. They're going to make a whole Apple spectacle of it, and they think that will happen in March, and that they think that it will be powered by Google's Gemini. So this is an important part of the note. It will enable multimodal interaction, stronger on-device AI, and also have Apple's privacy-focused architecture. They think it will give users access to larger models like ChatGPT and Gemini, which Evercore sees as a long-term monetization opportunity. They also cite potential revenue from AI as a service, faster device upgrades as well. But a positive day for Apple. But as you mentioned, Sam, Apple shares still under a little bit of pressure today, down about 1/3% right now.
I'm so fascinated by that Gemini because Wedbush is talking about sales in China. We know that they've been holding up well, but Google doesn't work in China. So let's see what happens there. Maybe they'll have to partner up with someone else. I think that will be obviously a story to watch, but it's just amazing how much these investors have been patient with this whole AI story. As Dan Ives pointed out, has been really the elephant in the room with an invisible strategy. So thanks for breaking down all the details of these notes and these price target boosts. So Marley, I'll catch you later on. Let's trade it now with Sarge Guilfoyle, president of Sarge 986. How are you approaching your example trade now for Apple?
Hey, how you doing, Sam? Okay. Now, a lot of traders miss this stock, right? Myself included. I've been talking about Amazon. I've been trading Microsoft, I've been trading Google, but I haven't been trading Apple. I got scared of Apple earlier in the year, and I missed this August through end of the year move. So what do? How do you try to catch up on this? I overlaid an Andrews pitchfork model over the chart from the April low right up to the present. For you younger traders, a RAF regression model would probably work just as well. What you find is that the stock has pretty much traded precisely between the central trend line of the model and the lower trend line of the model. And that lower trend line of the model runs almost congruently with the 50-day SMA, simple moving average. So you do have a trading range that you can work with. What I would like to do, rather than lay out all the capital, because it's $277 a share at the top of the chart, maybe you don't want to go that far. Maybe you want a little less risk. So you can put on a simple bull call spread. Let's go out to January 9th. Let's say purchase, we'll do it in minimal lots so we don't get anybody into too much trouble. You purchase one January 9th, $280 call, which is a little out of the money for a rough $6.45. Against that, you're going to write one January 9th, $300 call, which is around the central trend line of my model, which is rising resistance for about $1. All right. In order to tamp down this net debit, we're going to sell one January 9th, $265 put, which is close to the 50-day SMA, for maybe $2.20. Now, yes, that does open you up to some equity risk, but it is discounted about $10 from where it's trading right now. The net debit of that trade is $3.25. The idea is to bet $3.25 to try to win back 20 bucks. Right? That's about a $515 percentage move if it works. Worst case scenario, you end up wearing 100 shares at $200 and $268.25, including the net debit, and with the stock trading below 265 at expiration.
All right, good stuff. An example trade for us for Apple this morning. Shares under pressure despite these price target boosts. So what are your overall thoughts on the markets today with the FOMC, of course, very much laser focus for these traders here?
I think we know what they're going to do. I think the press conference may have less importance than it has had in the past. This is Jerome Powell's fourth to last FOMC press conference. So I think we'll start to see his words mean less and less as we go forward. I think the market will start to price in Kevin Hassett, who is the favorite to take on the role in come May. It will matter whether Powell steps down from the board or not, because if he steps down from the board, then Trump really has a little more leeway in how he can maybe influence who's on the board and who isn't. If board remains on the board, then he has to remove Stephen Myron in order to put Hassett in his spot. So that it gets a little tricky there. But going forward, it's dovish. They will cut by 25 basis points. They'll probably try to act a little hawkish. I think we all know they have to cut by another 50 basis points. Really 75 basis points just to get to neutral, because they're probably a little more restrictive than they should be right now. But that's where we go. This is the dominant theme for the week this week. There's not a lot of macroeconomic data out there. Earnings were really between earnings season, although we do have a couple of decent-sized names reporting this week. So how we come out of this with the dot plot, which is really ridiculous if you ask me, but algorithms do react to it, and algorithms control the market now. So how the dot plot looks, how the wording in the statement sounds, and how Powell comes off in the press conference are the things that will move markets.
Yeah, we'll be watching that dot plot, the SEP as well. A lot of things to factor in to see what the market does as far as some of the reactions. Really appreciate the insights. Stephen Sarge, Guilfoyle, President at Sarge at 986, joining us there.